Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, OpenAI co-founder Ilya Sutskever announces rival AI startup. As well as that, the ECB urges Eurozone countries to cut high levels of debt. And finally, Vladimir Putin seals strategic partnership with North Korea, North Korea's Kim Jong-un. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure to subscribe. The first article we'll talk about is to do with OpenAI's co-founder and his new startup. Now, the OpenAI co-founder, Ilya Sutskever, has now started a new rival AI startup, which is focused on building what is being termed safe super intelligence. This comes just 1 month after he quit OpenAI following a number of executives failing a coup against the CEO Sam Altman. Now, this is kind of funny that we're rounding back to this topic of that kind of coup, which of course we covered when it did take place on this channel. And I think if many of you can kind of remember back to what was going on around that time, essentially what we did see was the kind of board of OpenAI revolting against that the CEO of OpenAI, that being Sam Altman, which was actually turned out to be far more popular with the workers of OpenAI and even just general individuals that are interested in AI, in the wider markets and that kind of thing. And as a result of that, when the board did try to kind of take over, remove Sam Altman from his position, we saw a massive kind of public outcry and an outcry within the company itself of OpenAI. And as a result of that, what ended up actually happening was a reverse coup where the board ended up kind of getting kicked out, and Sam Altman was able to retake his place as CEO at the massive AI company. Now, of course, going back to that time, the kind of key issue, or at least the reason why we did start to see that coup take place, was this kind of difference in goals, this difference in outlook, and the kind of divergence that we were then starting to see between the kind of key executives within the company and the board. As if you can kind of remember back to when we were talking about that, the large topic was that this was kind of a non-profit umbrella company looking after or managing a for-profit company, that being the products are offered by ChatGPT and that kind of thing, which of course earn revenues and make a profit, or at least hope to make a profit. But the kind of board was obviously sitting and looking at this company from that kind of non-profit perspective of just hoping to build out and achieve kind of the greatest gains from artificial intelligence for the wider public, for the world. And that kind of difference, of course, creates conflicts, and that's kind of what we saw, and that's why we then started to see the fallout, and we saw the kind of attempted coup, which of course failed. What this article though focuses on is it comes back to one of those key members of the board, I believe, and it kind of links back to that and catches up to where that member of the board is now heading with their lives, heading with their kind of career and that sort of thing. And that kind of key figure that we're looping back to is Ilya, and why this is so important to actually cover is because he is announcing this kind of rival AI startup. And we have seen many individuals leave OpenAI and start their own kind of things. I mean, just take Elon Musk, for example. As much as he was a bigger thing before OpenAI, he was a massive corporate star. He had started many companies of his own and was powering ahead with Tesla at the time. He still was one of those kind of key members within OpenAI, which then did leave. And what we're seeing now is another kind of version of that, it does seem like, with Ilya. And what Ilya is announcing here is his new startup, which he's pairing with two other co-founders, and they kind of hope to kind of build back on that non-profit. It does seem like that non-profit goal that OpenAI originally had to do with its AI capabilities and AI growth and that kind of thing. So it is interesting to kind of see this return of mindset, with the former co-founder being one of the world's most respected AI researchers. What he and other startup workers have begun is a thing is being called, pardon me for that, being called the Super Intelligence Inc., which apparently is the world's first straight shot SSI lab. This one goal and one product offered by the startup is ultimately safe super intelligence. This new startup is also being co-founded by another ex-employee of OpenAI named Daniel Levy, as well as an AI investor and entrepreneur, that being Daniel Gross, with Daniel Gross also having worked as a partner at Y Combinator, which Altman ran. Daniel Gross has also got stakes in many other startups and larger tech companies such as GitHub, Instacart, and other AI companies like Character AI and CoreWeave. The trio said that their main goal is to develop super intelligence which will supersede any human cognitive abilities whilst being unencumbered by revenue demands. And that's the kind of key goal mindset kind of thing which started off the coup back at OpenAI some time ago now. And that's what we're kind of linking back to there. So it'll be very interesting to see what does come of this. Obviously, it not being, for revenue, for profit, does kind of mean that it is somewhat of a rival to OpenAI, but in other senses it's not, because it's not kind of competing for those same kind of customers and that kind of thing that OpenAI might be competing for. But at the same time, they're still driving to build out the most powerful AI network. The super intelligence kind of focus is something which both of them share, I believe, and therefore we will see this rivalry become a serious topic. So it will be interesting to see what does come of that. Definitely keep your eyes on it nonetheless. Next article to talk about is to do with the ECB and the Eurozone, which is kind of topic which of course we're always covering, and is something though which we're probably more often covering on the economic calendar with all the the news and that kind of thing coming out. But here we have the ECB now warning all Eurozone countries of the fact that they're now facing significant fiscal burdens. This comes as the fiscal burdens from aging populations, extra defense spending, and climate change all continue to grow and therefore push the overall debt levels higher. So a very interesting article there on a very important topic. And of course, whilst generally we're covering what the ECB is saying about monetary policy, what they're saying about, basically, the monetary policy, the economic conditions of the nation, or, in this case, the kind of economic zone. In this scenario, we're actually looking at the ECB warning governments within the Eurozone itself. So warning, the nations directly of the issues which are now starting to arise within the economies. And of course, that's so important for us to understand, just simply because, it informs us of the potential future economic conditions of a nation, how that might affect markets and that kind of thing. But also it helps us further understand the way that kind of the ECB may change or alter their own outlooks, monetary policy, and that kind of thing in accordance with these key worries. This worry is of course more so related to fiscal debt burdens and that kind of thing, which we've spoken about a lot recently, especially across the Atlantic with the US. But still, it's a very important article, a very important topic to cover and understand, with key officials at ECB estimating that all Eurozone nations need to reduce their budget deficits by an average of 5% points of GDP. This would require the savings of extra revenue of 720 billion euros, according to the FT. These debt levels have risen, especially following COVID and the Russian invasion of Ukraine. Now, just rounding off on this article, I feel like it's very interesting to kind of see these growing worries to do with debt. This is something that we've seen, across the world, or at least across the Western world, especially with, as I said, earlier on, across the pond with the, the USA and Biden and Trump going head to head in the US presidential election this year. With that, we've obviously heard numerous warnings from multiple think tanks, but also, key regulatory and fiscal agencies, which have basically warned the US of, it kind of nearing this fiscal catastrophe, because ultimately both parties are promising increased spending, it seems like, and they're not looking to see where extra tax revenue can actually fund that. And it does seem like this is a growing issue that we're now seeing in the West, especially following so many recent kind of external factors and external basically threats and issues which have added to the economic costs of numerous nations. And that's what we kind of linked to at the end there, with not only COVID but also now the Russian invasion into Ukraine, which is especially affecting Europe with its inflation issues. So this is a growing issue, and I think this is something that we're going to keep on coming back to as things do develop within the West. Last article to talk about, though, is more so to do with geopolitics and Vladimir Putin. Now, Putin and Kim Jong-un have now signed a strategic partnership which will deepen trade and even military ties between the two nations of Russia and North Korea. This comes as they also vow to work together against international sanctions, with the Russian president announcing the new partnership came with an unspecified mutual assistance clause which would apply in the case of aggression. During the meeting, Putin also thanked Kim for his support for Russia's invasion into Ukraine, as well as him thanking him for welcoming his visit to North Korea. Now, why I felt this was so important, of course, to note is this massively ramps up world tensions, which are already kind of at all-time high levels. Of course, Russia is still amidst their invasion into Ukraine. We still have things boiling over in Israel and the rest of the Middle East, especially now recent war plans have been approved for Israel's operations into Lebanon. So we're looking at another front being established on the northern, Israel border. So that's something that we're obviously going to have to be looking out for. And then that kind of ties in with the potential of Iranian involvement and Syrian involvement and even Iraqi and of course Yemeni involvement. So all of that's kind of boiling out over there. But now we're also hearing this kind of new strategic partnership, military partnership, it does seem like, between Russia and North Korea. In that mutual assistance clause, kind of linking to something that we might usually associate with NATO's Article 5 doctrine, but ultimately that kind of being something that's now being mentioned between these two key powers, which seem to be enemies of the West, does kind of ring alarm bells, I think, and could also spark kind of some market volatility over the course of this week and today. So definitely keep this on your mind. That's all to talk about on the articles, though. Next to talk about, like always, is the charts, and to begin with, like always, we're of course on the US 30. Sadly, there really isn't as much going on the charts. It does seem like this, or today, not so much this week, but today, as most markets that we generally look at do seem like they're kind of stalling out. Not much is happening. Arguably, that's because we didn't receive much important economic data over the course of yesterday, and as a result of that, we often see markets kind of trend to the side, make little move and stagnate, and that's kind of what is being represented, it does seem like, on the US 30, on the Dow Jones, which of course we've got up right here. And as you can see, whilst in yesterday's morning market briefing, I did note how price had neared this kind of key liquidity zone and somewhat reacted to this key liquidity zone with price spiking into it and spiking out, which of course represents that area as a key area of resistance but also liquidity, but not much has actually come of that move over the course of yesterday, with price stagnating and just kind of remaining and consolidating, and that can clearly be understood just by looking at the market action that we did see over the course of yesterday. I mean, seriously, price barely moved an inch, and all of those candles are smaller, it does seem like, than any of the candles that we did see form over the course of Tuesday. So that is kind of a massive lack of action, something that we kind of haven't seen for quite some time, to be honest. Maybe not since until the last day of May, and also back around the 24th of May as well. So some key moves not taking place on the US 30 to note. Next to talk about, though, is the dollar, which is also kind of not making any big moves. At the same time, though, price is trending to the downside, though, it does seem like, and following the kind of massive spike that we did see in price over the course of last week. It does seem like we're now seeing this pullback. It does seem like we're now seeing this retracement. And so it will be interesting to see whether price does now react to any of these key levels, which price is nearing. Currently, price is sitting on that 38.20 Fibonacci retracement level. We know that's obviously a key level which price usually reacts with. At the same time, whilst price has seemingly reacted with it before, it's now kind of trending through it, staying around the 38.20 level. So it doesn't seem like it's reacting to it in the same way that we would usually expect price to react with a fib level. As a result, we have to kind of almost look to the next level, that being the 50% Fibonacci retracement level, which does in fact line up with a key liquidity zone, a key support level. So it will be certainly interesting to see whether price does react to that key liquidity zone should price make its way down to that level, which it does seem like it's making its way down to. Next to talk about though is Euro USD, which whilst it did react to this key liquidity zone and key resistance level over the course of Monday, and then on Tuesday it remained within that liquidity zone. So we noted that there were chances that price would now continue this sell-off to the downside and continue breaking and making new lows. Instead, we've seen price actually kind of continue this slow trend to the upside, breaking now above this key liquidity zone that we noted as a key area for price to interact with, and now we're kind of trending upwards. So it will be interesting to see whether price does make its way back into this old range, maybe even make its way all the way back up to this key liquidity zone that we've previously noted. Obviously we have some kind of small liquidity zones within the middle of this range which price could also interact with, but we'll have to wait and see to find out what does happen. So keep your eyes on Euro USD. Next to talk about though is pound yen, and ultimately we are receiving the Japanese inflation rate figure today, so that will be massively impacting the pound, but also we have recently received of course the British inflation rate figure, which hasn't affected price too much. Price is rising to the upside, but we haven't seen the same volatility that you might usually expect from a figure like that. Ultimately though, a very significant piece of information to note is that price is holding above the 200 yens for a pound level, and is continuing to trend above that level, and is now nearing and actually reacted to over the course of yesterday that 201 level, which is of course very significant. And the question will be over whether over the course of today we can now break above those recent highs made on the 14th of June. So keep your eyes on pound yen. Next about is Bitcoin, which is currently, as I speak, sitting at the $65,000 a Bitcoin level. Of course, I noted the very significant movement made by Bitcoin to start off the week, which was, it price breaking once again below this key liquidity zone. And it does seem like over the course of Monday and Tuesday that price had retraced back on itself and reacted to this liquidity level once again, and then sold off from that area of liquidity to the downside. We are currently kind of, continuing that trend to the downside, it does seem like, but over the course of yesterday, not many moves were made, not too much volatility within the market. So it is hard to say which way price is going. So keep your eyes on Bitcoin as things do develop. Next to talk about though is gold, which is kind of in this weird position, because I did note how it seemed like, price was forming this bearish flag. At the same time though, price is currently consolidating and stagnating just at the top of that flag, and is arguably now almost trending out of that flag just by moving sideways rather than selling off. So it will be interesting to see now whether, because we're breaking out of this flag, whether price will move higher and maybe, kind of hook back on itself to react to this liquidity zone once again, and then continue that move higher. So definitely keep your eyes on gold. Lastly, to talk about on the chart cycle ways is oil, where there's not too much to say apart from the fact that price is halting at those all-time, well, not all-time high levels, but levels not seen, of course, since the 1st of May. So key levels which price is now broken up to after breaking above this very key area of resistance which price was reacting to, which was that $85 a barrel level, as price does now hold above that $85 a barrel level. Lastly, to talk about, as always in these morning market briefings, is the economic calendar. We're receiving lots of economic data today, so make sure you're listening up for all of that. Firstly, we're receiving the Aussie manufacturing and services figure, followed by the British consumer confidence figure, followed by that we're receiving the Japanese inflation rate figure, as well as the British retail sales figure, and then the the French business confidence figure, followed by the French manufacturing and services figure. Followed by that, we're receiving the German manufacturing and services figure, as well as the British manufacturing and services figure, as well as the Eurozone's manufacturing and services figure. Followed by that, we're receiving the Canadian retail sales figure, and to end of the day, receiving the US manufacturing and services figure. So lots of manufacturing and services figures that we are receiving today, as I did know, but also that Japanese inflation rate figure and British retail sales figure are two figures which will massively affect pound yen, of course, over the course of today. So make sure you're listening out for those. But that's all from us at Wildwood Capital. We've got lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us once again. See you later. Bye.